We shift back here to the United States, where the Federal Reserve today cut interest rates for the second time in a row, despite inflation remaining above its target rate. Here to explain the move, well, none other than someone who knows all about it, Kelly O'Grady, who is there at the New York Stock Exchange. Kelly, good to see you. Why did the central bank do this today?
Labor market. That's really the focus. And it was the last time around when they cut interest rates the first time this year, back in September. Chair Jerome Powell emphasized that they're seeing growing weakness in the labor market. And yes, inflation is rising. Remember, the one piece of economic data from the government that we got during the shutdown came last week in the form of the consumer price index. It said that inflation has ticked up to 3%, but it was less than expected. And so it's not that Chair Jerome Powell said, hey, we're out of the woods when it comes to inflation, but it's really the fact that they're seeing that concerning weakness in the labor market. He was actually asked at one point about all the layoffs that we've seen this week in the past few weeks at Amazon, UPS, Target, and he said, quote, they're watching it very, very carefully, Ed. So it's really all about the labor market and wanting to ensure that that doesn't get worse.
Okay, so those are numbers and theories and professionals dealing with all this and trying to manipulate the market such. How does it affect everyday Americans?
So it just got a little bit cheaper to borrow money, essentially, right? The benchmark interest rate, that's what the Fed sets. It went down to 3.75 to 4%. That is the lowest that we've seen it since November of 2022. But, it's going to impact things like your credit card rates, your auto loan rates, your adjustable mortgage rates. The thing is that a quarter point, it's not huge, right? If you've got a credit card interest rate of over 20%, a quarter of a percentage point is not going to move the needle much. And I think when we've talked to, I know you've talked to a lot to lower income consumers, we're hearing over and over that when you've had prices rising cumulatively over the past 5 years, more than wages have, at quarter point, it's not doing enough for people to really feel that relief.
And the Fed's got one more meeting this year. Would they cut rates again, or would they wait, or is it too soon to say?
So, Ed, the second Powell uttered the phrase that the December rate cut is, quote, not a foregone conclusion, I'm at the New York Stock Exchange, the market just started selling off, right? Because at the last meeting, we expected to get 2 rate cuts, including today. So that would have meant another cut in December. And he said, especially with the lack of economic data and these push-pull between rising inflation and the labor market, that is certainly not something that can be said with certainty, I guess is how you would say it. Investors didn't like it, and I don't think businesses or consumers like to hear that either.
We shall see. Kelly O'Grady at the New York Stock Exchange. Thank you, as always. Great to have you join us and explain all that.